Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so markets are trying to continue to fight higher. We have some major levels we are closing or closed at yesterday that could denote another leg up in this market before it is fully cooked based on technical analysis. So we're going to take a look at that. We just got the private sector employment data, the ADP out. The ADP private sector came in at 37,000 jobs. That was compared to the estimate of 111,000. Now, last month they did revise slightly lower, not a lot, just about 6,000 jobs lower. But nonetheless, this headline number does raise the possibility that the labor market is slowing down. And remember what I've said, all the trade threats, whatever it is, the market will ignore those until the economic data, mainly the labor market, begins to weaken. Once that happens, things get really real for investors. All right. That's where you can't deny that, again, there's a slowdown in place once you see the labor market kind of weaken. Now, the question is, will the Friday non-farm payrolls data reinforce this weakening? Or are we just looking at kind of an off number here on ADP private sector? We don't know yet, but Friday morning, we will watch that non-farm payrolls number. All right. Flipping over to the daily chart here, this is the QQQ, but let's start out with the intraday SPY. I want to show you here. So yesterday we closed right around this yellow line. Now the yellow line is important because it's this pivot point that I've been talking about with you guys, that if we close above it, then you should open the door to a move back to the high pivot here, which is your all-time high on the S&P 500, all right? So again, if you look at yesterday's close, we basically closed on the line based on the futures right here. Now, today, we were higher again, but have since fallen back. If we look at our intraday, this is where ADP private sector jobs data came out. So we can very clearly see that the market did see some selling on the weaker economic data. But again, we're only back to the flat line this morning, right? So it's not like we're seeing a massive sell-off. We just went from slightly green back to the flat line, mainly because, again, ADP private sector employment is not the non-farm payrolls. It's an important number, but it's definitely second tier to the non-farm payrolls, which is the most important number out there for the labor market, right? And the unemployment report, obviously, as well. So again, a little bit of selling here brings us back to the flat line. Let's watch and see. Now, yesterday and on Monday, I said to you guys, all right, Monday, first of the trading month, generally you go neutral to higher. All right, what did we see on Monday? We opened lower, we closed higher. I said yesterday, again, there's a theme here where investors are buying every sort of dip. We were down yesterday morning, we floated higher throughout the day. I said yesterday, and I'm going to continue to watch this, is that in general, you go with what's been going on. So the trend or the float intraday has been the commonality that you have to assume will continue until it doesn't. And when it doesn't, you just can't say, oh, it's a one-off. You have to look at the volume. If the volume spikes up, it tells us institutions are beginning to unload heavily, and we need to sit up and pay attention, basically. All right. So again, let's go on the assumption we'll float higher today. And then if something changes, let's look at the volume and look at the reversal and take closer note. All right, so again, that's where we are on that chart. Here's your daily QQQ. The daily Qs did close above this high pivot, so we're going to keep an eye on that. That could, again, send it up here. If we look at the QQQ, which is the NASDAQ 100, the reason why you pay attention here is because we're only 2.5% or even 2.4% away from the all-time high. So we are very, very close, just like the S&P. It would not take a lot to rally us up into this key level here. One little side note here that I've been playing around with and talking to Drew, who's he's my head cycles analyst here at Verified Investing, is we have a cycle date, a big cycle date coming up in mid-June. So it's about a week and a half away here. And I want to be very intrigued, or I want to keep an eye on where the markets are into that. And if you kind of play it out in your mind, and I always play out different scenarios. As a trader, I want to always be prepared for every possible outcome. But in my head, I'm thinking, okay, if they push the markets up over the next week and a half, make a new all-time high, we've talked about how it kind of stops out the bears, right? It stops out any stops that were right at that all-time high, clears out the last kind of weak-handed bears, and it's max bullishness. And that comes right into the cycle date. So something very, very keen to kind of keep an eye on. So again, just a couple scenarios here that I'm going to be watching in case we do float up into that mid-month cycle that is approaching very quickly. All right, couple other things here, guys. The dollar today is going lower. Remember, a weaker labor market could denote the possibility for more Fed rate cuts, and that, again, weakens the dollar overall. Notice how, again, on Monday, we closed below the line. Tuesday, we closed back above, no confirmation. Now we're testing this line again. So basically what we're seeing here is a hammering on this key level. And eventually, I do expect it to break to the downside. The 10-year yield on the back of the ADP jobs number, it is weaker, which is to be expected. Again, a weaker labor market means that they might be, or we might be seeing more Fed rate cuts. Therefore, rates are coming in just a little bit. The one thing, so you're in this bigger channel, right? This would be a wedge pattern, actually, a wedge pattern on the 10-year yield. The only thing short term that has me a little bit kind of wondering if we're going to start to come down, you have a trend line right here, right? Low pivot to low pivot. And look, we've basically starting to break this line. And again, if you remember, I don't know how many of you guys pay attention to all the hardcore posts that I do, the articles I do on the weekend on the homepage of Verified Investing. But again, on the weekends, I spend a lot of time researching these charts. And one of the charts that I posted up was talking about a breakdown in the 10-year yield and how it might tell us that there's going to be a weaker labor number this week. Lo and behold, the ADP was weaker. We'll see if it confirms on Friday in the non-farm payrolls. But just again, those homepage articles every weekend are like literally hardcore analysis on both currencies, commodities, crypto, and stocks. Very, very cool stuff there. All right. Stocks in the move today. We have Crowdstrike getting hammered, trading near 450. This stock came out with earnings yesterday after the bell. They beat on earnings, but missed on revenue. And if we look at the chart here, take a look at this, guys. This is actually really interesting. I want to show you this here. So what we had here was kind of like a pseudo parallel. It was kind of interesting here. If we look at this chart here, you can see, look at this, how yesterday we basically traded into this level. And you can see the low here and kind of pierces here. This was obviously July 2024 into August, the August swoon of 2024. But then we hit it here and hit it here. But look at this trend line, pivot to pivot to pivot. And going into earnings, what did we tag? Right there. And in fact, in Earnings Trader, which is part of Smart Money Stocks and ETFs, where we trade earnings as they're released, I went over this chart and I said, guys, this looks like it could fall on earnings because we went all the way up from the low end of the parallel to the high end, and then look at the dip on earnings. So just kind of a cool little thing. Now, in terms of technical support, there's going to be a support line just a little bit below. This is not a swing trading level for me. This is a day trading level potentially, and that's around 443 to 444. We can see, again, this area right here is basically a flat shelf. That should be support. So again, it's about $7 lower, $8 lower than current support or current levels on Crowdstrike, but that will be a key level that I'm watching during market hours. Asana today, initially yesterday after the bell, popping on earnings, then selling off. It is off of its lows, trading around 17 and a quarter. If we bring up the daily chart, the only level I would be interested in on Asana here would probably be around this 1630 level here, down maybe to this 16 even number. Somewhere right in this vicinity here, you can see this area of support on the charts. It's kind of been grinding up, and then retracing on earnings here. Again, it's still trading around 1725, 1715. But again, around 1630 to 16 even number would be the key support. HPE, which is Hewlett Packard Enterprises, is up on earnings. So again, they reported earnings yesterday after the bell. The stock spiking higher and then grinding up throughout the overnight and into pre-market here. If we look at HPE, the only level I have is right here that I would day trade potentially as a short, and that would be at 20.4 approximately right here. And you can very clearly see pivot low right here. Those two lows we broke. And so that will now be resistance on the upside should price get back into that level. Robinhood pre-market popping up. This stock continues to go higher. However, look at this, guys. Huge alert on Robinhood. Pivot low to pivot low, perfectly parallel to this high. And look at where we are pre-market. We're right around that 74 even number. That is a huge resistance. Now, this is not so much, this is a day trade, but this is also great for a swing trade. This, again, folks, is an amazing parallel. Remember Crowdstrike? We were just looking at Crowdstrike, how in this chart, it went from the low end of the parallel to the high end, and look at the slam down it just took. Well, if we look at Robinhood, very similar, right? Pivot low to pivot low, perfect parallel, and it's right up in the pre-market into that level. Again, who knows what it does today, but on a swing basis, I think this thing comes down sharply and trades back into the mid-60s, even the low 60s over the next couple weeks here. So again, Robinhood, keep your eyes on this one. This is probably my highlight of the day. I've just found this parallel this morning. I already had some other levels on a swing trade basis, but this one right here, this parallel gets me really excited based on how extended this chart is, the valuation metrics, the technicals, and everything in between. SMH is up a little bit today. This is the semiconductor ETF. We've seen semis go nuts, guys. Semiconductors have gone nuts. We've seen, obviously, the big move up. But look at this pattern. This is a bullish flag pattern. It's beginning to rally, and look at where the major level is. This will be a fantastic swing trade short up here, or at least it should be. The idea here is you have a gap fill and a down sloping trend line merging right around 261 to 262. If price goes up into that, we should have major resistance on the SMH, the semiconductors. And you can just go to the other charts here. I mean, NVIDIA's had a monster move here. It did pull back on earnings right here, but now it's right back up, trying to fight back to that resistance line right there from the earnings gap up. And then if we look at something as ridiculous as CoreWeave, guys, I mean, look at this. This is now, listen, I've tried to short this. I have no shares with my broker to short, so I can't. But this, to me, listen, this is one you got to be careful on because it could go up another $10 or $20. But this is where, for me, if I had shares to short, I would be dipping a toe in the water on this. It has gotten way ahead of its skis here, up again today near 160. And if we just look at a percentage move, just from the recent lows, we're just going back to April 21st. This thing is now up 360%. That's in essentially 6 weeks, 360%. Insane move there. And again, when this thing comes in, it's going to come crashing down. You just don't know when that will be. But my guess is somewhere between 160 and 175. It'll top out. And again, I'll keep trying to find shares with my broker to pick up a small, tiny short position on this one. All right, let's go to Bitcoin real quick here. Bitcoin continues to languish here. Notice how the stock market is strong, but Bitcoin has suddenly gotten much, much weaker. Bitcoin, like I've said to you guys before, sometimes works as a leading indicator for the stock market, so keep an eye on that. But notice this is now an inside bar bearish pattern again. So again, we had a big reversal candle, inside bar, bear flag plays out, down into support, right? Very obvious support right here. Now another flag pattern is coming in. That implies potentially further downside. If we break the 103 level, the 103,000 level, we're likely headed back to 96 to 94,000 right in this range here. So again, just keep your eye on Bitcoin here, not only because it looks like a bearish pattern, but because, again, it can be a leading stock market indicator of risk off. Next up, let's look at gold. Gold today is flat to positive. Notice yesterday we had a retrace, but it held the line right there. So this remains bullish, and if it continues to consolidate like this, it would be a bull flag pattern setup for a potential move up. So keep an eye on that one there. And then silver is basically flat to slightly lower today, but same thing. Big bull move, held the line. Today it's slightly below the line. Let's see where it closes today. But ultimately, again, this could be starting to make bullish consolidation on silver. Oil continues to slightly grind higher. No trade for me unless maybe I'd reevaluate for a potential short if we get into the 65 to 66 level, as that, again, is huge backdating. Was support, now obviously resistance right here going back. So again, if we were to trade up into here, I would start to say, all right, this could be a good opportunity for a short trade on oil. And then if we take a look at natural gas here, If we bring up the nat gas chart, nat gas again still stuck in kind of purgatory, in traders purgatory. What do I mean by that? Well, basically it's not at resistance and it's not at support. It's kind of in between. And so as a trader, we went over this yesterday and I kind of taught a little bit about the psychology behind it and having to be disciplined and how that will ultimately serve you as a great trader or investor. Here's a situation where there's nothing there, kind of like on oil, right? I mean, if we looked at that oil chart just before, yes, I have my levels, but I have to wait. And listen, is there a chance I'll miss a trade? Maybe I miss a move on natural gas or oil? Yeah, I miss moves every single day. But ultimately, what does it matter, right? It doesn't matter the trades that I miss. It's the trades that I take. And what is my win rate? What is my profit? Those are the metrics that ultimately make me money, right? Every trader, doesn't matter how experienced you are, you're always going to miss trades. It's just the nature of the beast. The best thing you can do is work on your psychology of letting it go, right? Are you one of those people that when a trade goes, let's say, Doge runs 1,000% or whatever, you know what I'm saying? Like one of those past ridiculous movers. Are you one of those people that starts thinking, oh man, if I only got in, why didn't I get in? Start beating yourself up about it. Or are you one of those traders like I've trained myself to be, where literally the next day I don't remember what moved yesterday? Like literally it's done. Now my focus has to be on the present. The present is what matters. And if you have any sort of clouding of your judgment or kind of like, oh, darn, I missed that trade, it could make you make a mistake on today's trades, which then can cost you more money. Forget what happened yesterday. Just like in life, you can't dwell on the past. All you can do is stay in the present and make sure that your future is better. Same thing applies to trading. That's the nature of the beast here. All right, guys, a shorter game plan today because honestly, I just want to get to trading. But as always, lots of good information here in the game plan. You guys are awesome for tuning in, day out, and basically following us and supporting us here at Verified Investing. Thank you so much. I will talk to you soon. Take care.